Welcome back, ladies and gentlemen, to the Peak Trading Lab. In today's video, it will be another interesting video. If you've not subscribed to the YouTube channel, consider subscribing because hot and more content is set to come your way. Now, in this video, I will be discussing about the diamond setup, but I've structured it again. I'll tackle the bearish diamond setup, and in the next video, I'll talk about the bullish diamond setup so that you can be able to get the difference in a quite clear manner. If you've not subscribed to the YouTube channel, consider subscribing because it will be fire. Now, this is the bearish diamond setup, and I urge at least to watch the Quasimodo pattern so that you can be able to see what I'm talking about in a better and a clear manner. The diamond setup is basically this ignored QM Quasimodo in a fake out zone, and basically the fake out zone can be coupled with a SSR level, meaning significant support and resistance level, because it was support at this particular level. At this particular level now it became resistance. So this is a fake out zone because it houses a lot of liquidity, so the market must at least violate it into a significant supply level whereby you should be able to sell from, and the supply level can be in the same line with the Quasimodo, now the major and the bigger Quasimodo level. Now, the diamond setup, this is the bearish diamond setup. Once you see a Quasimodo in a fake out zone, and the fake out zone is just a zone of liquidity whereby it houses a lot of liquidity in form of either it can be in form of the SSR coupled with the resistance level multiple, or as well it is not a must for it to have a support again. So it depends with the context. Now we have our high, low, high, lower low. What does the normal QM say? You should be anticipating to sell whenever the market retests this shoulder, this particular point. But this one diamond setup is always a trap zone, and it signals and it tells you that indeed this zone is not healthy to sell. So those who rely on this level alone without checking what the market has will suffer serious losses. So the market, whenever it gives you this setup in a very critical zone of liquidity in form of the fake out zone, it qualifies to be our diamond setup. So whenever you see this setup forming in some sort of a Quasimodo pattern and it is in a zone of liquidity, don't take the trade. Why? It will take out the liquidity residing above these highs into a supply level, and the supply level above it is where you should be anticipating your sales from. The supply level is not a must for it to be in the same line with this Quasimodo level, this one. So this one qualifies to be our diamond setup, and I've circled it so that you can be able to see it's always a trap. Not every Quasimodo is tradable, but at least if you have a framework of whatever the market tries to communicate, you'll be able to trade it successfully. So this particular level, it is an invalid one. Why? It is a diamond setup. It's in a zone of liquidity. Now, this diamond setup, you can be able to see it here. Let me use the so that you can be able to see it better. The circled one qualifies this one as our diamond setup. You can be able to see that initially the market, like I said, maybe this one qualifies because it's in a zone. This was support, this particular point, this smaller wick, resistance levels. So let me, so that you can be able to. So it is not a must for it to give you the SSR. Now, initially the market was trending to the upside, then it began breaking lower. But what did it form instead? A zone of significant resistance level. So it qualifies for it to be a fake out zone. A fake out zone. A fake out FOZ, fake out zone. Fake out zone meaning it houses a lot of liquidity in form of the buy stops. We always tend to have the buy stops of the retail traders who are anticipating the market to break above this particular level so that they can be tagged long positions. And also have the stop losses for the early sellers who are selling at this particular level, and the stop losses slightly above this level, so they will be taken out. So the market will yearn to check out both parties, the early buyers or the early sellers and the breakout buyers. So it's a zone of liquidity having both buy stops and also stop losses. So the market created this significant zone, resistance, 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 resistance. So it qualifies to be a fake out zone whereby there is a lot of liquidity. What formed here? Initially, it began like a Quasimodo pattern because we have the high, we have the low. Just a moment. We have the high, we have the low, we have the higher high, then we have the lower low. So it actually began forming like a normal Quasimodo pattern, but it failed. Why? Because it's in a zone of a fake out zone, a zone of liquidity resistance level. So it is a diamond setup now. Whenever you see it forming in a zone of liquidity, it qualifies to be a diamond setup. So don't take the trade. What you do, just wait for the market to manipulate it into a supply level. So this is our supply level, this one, or our bearish order block if you want to call it in terms of ICT. So you wait for the market to manipulate it, take out the liquidity into a supply level. Can risk the stop loss should be slightly above the supply level. Then your take profit should be this lower low, first lower low, because most of the times the market will yearn to reach into it. So basically, ladies and gentlemen, this is the bearish diamond setup, and at least I want you to back test and see where it works perfectly. So again, this is it. It's a zone of liquidity. We have the buy stops and the stop losses. Buy stops for those who want to be tagged in the long positions, the breakout traders, and we also have the stop losses for the retail traders. So ladies and gentlemen, try to back test and see how it works best for you. It works in all asset classes.